Hi, welcome to this video day, Saturday the 11th of November, and we're going to be looking at two high probability chart setups today, which we looked at last week. They are USD JPY, Euro JPY, going to the charts in a moment. Now, in terms of since last week, we haven't seen that much movement, but both pairs are showing classic distribution in my view, which points to a big move, okay? And in terms of the yen, I think it's getting ready for a huge move. It's already started to move on the emerging market currencies, the commodity currencies, the euro and USD. The yen hasn't really moved much against them yet. But my view is it's going to be a really big move. And there's a couple of points I want to discuss when I do the price action, which have made me more bullish this week, okay? Now, in terms of the charts, I'm going to go to them now. As per usual, we're going to be using big levels of support and resistance backed up by our favourite tool in Forex trading, the COT, the Commitment of Traders Report. If you don't know what it is and you're new to our videos, simply click on the link beneath this video to learn more about it and join our mailing list. It is, for us, the best tool in Forex. If you just want to watch the video through right now, just keep in mind what we want to do is always trade with smart money commercial hedgers when their positions move aggressively against large speculators. Now, what we're going to do first of all, take a look at USD JPY, and we're going to start with the Commitment of Traders data. The COT data, and on the COT data, it's always foreign currency first, so it's Japanese yen v US dollar. We'll reverse it round in a moment to USD Japanese yen. Now, someone actually very kindly showed me how to do the positions on the actual chart rather than doing two, which I will do next week. I've just been a bit busy this week. But in terms of this chart, what is really, really interesting is I've drawn a black line here. It's through 100,000 long contracts by the smart money commercials. Now, we're interested in what this smart money is doing against large speculators. We want the commercials to go aggressively against the speculators. Now, when the speculators are going short and the commercials build up above 100,000, you can see what happens. Big rally, okay? They come up to 100,000 again. Big rally. They come up to 100,000 again. Another rally. We're at over 100,000 here, same as here. We haven't rallied yet, but basically you can see support is coming into play. That's obviously 88 on Japanese yen USD. If you reverse it around, obviously it's 114. Now, you can see the speculators are heavily short when the commercials are long. And, on the moves above 100,000 by the commercials, the speculators get hit. They're going to get hit again. This extreme is a similar size to this one. This is basically a 500 pip rally, okay? I think this will be a 500 pip rally as well in favour of the yen. And what I've noticed here is commercials and specs have flatlined this week. And what I mean by that is this is last week's data here, then this week's here. And you can see it's very little change in the commercials positions, just a slight increase. In the specs, it's just a slight decrease. The specs are more important here because the slight decrease shows they're running out of power to force the yen lower. We'll see that on the USD JPY chart in a moment. Now, we saw this on USD CAD. As soon as the commercials and specs flatlined, okay, the specs have run out of power, okay, they were selling the USD against the CAD. It then just immediately broke in favour of the commercials for, a 500 pip rally in USD CAD. I'm expecting the same again in this pair. So let's go and draw some levels on the chart. Okay, we're on the USD JPY. We've got the chart the right way round. And in terms of the commercials, I just want to make a few points before we look at some levels. And the few points are in relation to why are the commercials so bullish of the yen? They're not just bullish on the USD, they're bullish on every major currency, okay? And I think these are the reasons, okay? Inflation has gone up in Japan, okay? So inflation going up is significant because that's what the Bank of Japan want. That's why they're doing stimulus. Stimulus is at its maximum. It can only come down, okay? Now, President Trump has been in Japan, he subtly said that they manipulate their currency. The Japanese do, it's obvious, okay? So with inflation going up, the Japanese are going to have to make some optimistic comments about the economy, which is going to lead the market to think they'll be reducing stimulus further down the line, okay? Now, if you note the euro rally, okay, you did have a relief rally on the French elections. Then, after that, you had inflation up in Eurozone. The market then assumes that the ECB must cut stimulus. The ECB hadn't said anything, but the euro rally was 1,000 pips. I mean, even now, the ECB, they've come around to the idea they're going to reduce stimulus, but it's not that great. But it basically it's caused 1,000 pip rally in the euro. Obviously, the euro's come off its highs now. Why can't the same happen in the yen? It can. Also, the Japanese stimulus is bigger than Eurozone. So you've got the potential for a rally just on the Bank of Japan becoming a bit more optimistic. So that is why I think the commercials are so bullish of the yen. Also, the potential for risk off. We've had risk on in the global economy, which should be bearish for the yen. But look at the dollar. It can't really get much higher on the yen here. Okay, so I think that's the commercials logic. I don't know, obviously, but that is my sort of reading of it. Now, this nice fall here came, obviously, as we said, when the commercials sell against the speculators. And everyone was bearish of the yen up here and bullish of the dollar. It's the same here, okay? And what you can see is we've got a distribution channel. And what I mean by that is you get a big rally up here in the US dollar, a little bit of sideways, push up again, yeah? And now we're failing to break higher. Okay, this peak here at 114.50 is significant. It's been taken out once. It's immediately been rejected. The round number, the dollar is struggling. Poke above, poke two, poke above, can't get through, settles on, pokes above, comes back through. You get the general gist, okay? Then that last poke, I think, of the speculators, their buying power is running out. This is a blue candle, but again, we reverse down. This red candle smashes into resistance. This one comes off. This one's trying to hold the 20-day moving average. And, resistance seems to be holding. And you've got some support at the next round number, the 113 level, this obvious double bottom here. That break there. And obviously you had the pokes there which couldn't take it out, which this one did. So that's the distribution channel. Now, we're short from 113.80 already. Okay, so we're early, okay, but we're always early. We're just kind of aggressive when we see these divergences. Our stop, though, is well back behind 115, giving it plenty of room because I think there's plenty of downside, which I'm going to go through my levels in a moment to my targets. Now, we're there. Are we going to get through and hold above? I just don't think so. I just feel now we've got double trend line resistance there. If we come through 113, then I think that is the end of the USD rally. Okay, so we'll probably add to our position. Now, there's going to be plenty of stops in this zone here between 113 and 112 from speculators. They're going to get run. So this level here, which you might think could be a level of support, or here, they're obvious levels to me from a technical perspective, okay? They're not going to hold. Yeah, because the stop run is basically going to push the dollar down. My first target is actually going to be what I consider to be the major support at 111, okay? So there, that should be the first stop, okay? And then I'm looking for most of the rally to be retraced. I'm not going down here. I'm going to go for the congestion zone, which is 109. Okay, so if we look at where we are now, we're at 113.50. It come through 113, go to 109, that's 400 pips, but it could become far more, okay? Now, In relation, if you wanted to get into this trade, I've just said we're early. We're very confident. We could be proved wrong, but we think it's a good risk-reward trade. If you come in through this level here, I'd say 112.70. Okay, I think that'll be then sort of kind of lights out for the USD. You can put your stop behind the 20-day moving average. So behind 113.50, or give it a bit of room to 114. So you're not risking too much. Let's say 130 odd pips, and you've got a potential, near enough 500 pips in terms of, profit. So it's a good risk reward trade. Generally, the market remains very, very bearish of the yen. So that makes us even more bullish. So for us, this looks a decent risk reward trade. Right, now let's move on to Euro JPY. On the Euro Japanese yen daily chart, I've got the COT net traders positions up here in the divergence. Now, regular viewers will know, obviously the CFTC don't give you data for the crosses, but you can work them out by just simply doing Euro USD and USD JPY, totaling what the groups have gone, and you can come up with a divergence, and that's what we've done here. Large speculators, 4.87 to 1 in terms of longs over shorts, so bullish. Commercials, 6.7 to 1 in terms of shorts over longs, so very bearish. Divergence between the two groups, 11.4. From the perspective of divergences, we like anything above 10. You're normally going to get something in favour of the commercials, okay? So this one, fits that criteria. On this rally up here, the divergence moves above 10. We top out, we come down. Rally again, divergence still above 10 here. Come down. We are going to sell here, okay? So if you see our previous videos, we've basically come in through 133.50. We slice the 20-day moving average. Come back to test it in the round number at 133. Try to poke through it, rejection. Come down a bit. We're coming back to the 20-day moving average, okay? Now, from the perspective of where we're going now, I think 133 is going to provide resistance, okay? So basically, I've pulled our stop down to break even. Now, obviously, if she rallies up through my stop, okay, I would be looking to sell her, okay? But what I'm thinking is the euro is probably going to break down, in my view. So what you've got is you've got the 20-day moving average in this trend line, then you've got 133 level to take out. If you wanted to get in, I'd just wait for weakness. And I would just come in through here. Okay, which is about 132.70. I would have these little tails here I'm not really concerned about. You just want to get it away from the round number, then you can sell it, in my view. Okay, the stops are going to be all clustered around here. I'm looking for them to get run. And yeah, I've said it on the last chart, I'm not looking for the first support level to hold. I mean, so you could say it was about 129.50 here. I'd really go from the major support level in the short term, which is going to be 128. Okay, so I think we should get down to at least that level, okay? But you see over here, I've noted, the euro rally on reduction of stimulus rumour is 800 pips from that big break right up to the high. I don't see any reason why we can't go back to 125. Okay, so if you come in through 130.170 down to 125, that's a really decent profit, obviously, if we get there. Even 128 is pretty good. Where do you want to put your stop? Well, you could put it behind the 20-day moving average, but I would just tuck it back behind this round number, okay? And then you can trail her down. Again, you have to see how things go. Obviously, like I said earlier, you can follow us and our levels in the member centre. But I just feel, the euro has lost steam on the upside. Yeah, obviously rejected here. We've dropped down and formed another level of resistance at 133. We're going to drop again. Stops get run. hopefully to 128, and hopefully all the way down to the 125 level. So basically, another decent risk reward trade in my view. We'll just see how they go. I'll update them probably next week. Thank you for watching me as per usual. Take care and have a good day.